So we were tracking 2.4% based on the flow of monthly numbers, and this is a pretty darn good number. I mean, we're coming off a year where you had a big fiscal stimulus, and some of that should be fading. The first quarter has tended to be a really weak number, and you had weather issues, you had the shutdown. It's a pretty darn good quarter, and it certainly pushes back against this hard landing notion, all this talk about recession risks. I mean, the U.S. economy is in pretty good shape.
I guess with, what we see on the first Friday of every month, to get too negative would have been, we tried to explain that. How can the jobs numbers, we had that one outlier though.
Yeah.
We had the jobs numbers that seemed so strong and an unemployment rate so low that didn't jive with under 2% for GDP, did it? Unless there was, I mean, it is hard to get workers now, isn't it?
It is. I mean, there's a huge shortage of workers. When I talk to business leaders at our wealth management business or our fixed income business, everyone's talking about a tight labor market. It's even tighter than the official statistics suggest. So the job market is even stronger than the overall economy. We're looking for easily over 200,000 in the next payroll number.
Just wondering if this is in the middle of trade tensions and in the middle of, everything, slowdown in Europe and Draghi and all these things, what happens if something good happens for the rest of the year?
Well, I think that is right.
It just offsets headwinds that you see coming anyway. And
well, it looks
would we be lucky to do 3.2 every quarter?
Yeah,
obviously?
I think we would. I don't think the trend growth rate in the U.S. economy is 3.2%.
Could we be wrong about that? And, we keep hearing from people like Kudlow that it's possible to go back to the halcyon days of
yeah,
these.
I think the problem with that argument is that it really depends on this view that the tax cut caused a massive investment boom.
And we haven't seen that yet.
And it just didn't happen. And so you're not getting that capacity addition from massive investment boom. And so that's why I think
you need the
most
productivity.
economists are skeptical about the.
I know that they have been. They really didn't, they didn't distinguish themselves with their predictions for last year either, though. This was supposed to be a sugar high, right? The sugar high is supposed to have worn off 18 months ago.
No, the sugar high story worked last year. This first quarter doesn't fit the sugar high story. It's lasting longer than I would have expected.
The sugar high was the stock market, too, and it's now up 50% since the election, probably.
Yeah, well, and I think that a lot of that has to do with the fact that, a lot of the uncertainty factors that were in the markets, fears of a spike in oil prices, fears that the Fed would slam on the brakes, fears of the trade war have faded. I mean, the equity market's gotten a lot of good news from the policy front in the last 2
I think Larry agreed to come on with
is that a little conspiracy?
I don't know. No, I know. I mean, he's been saying.
No, he's been saying.
Are you
this
monitoring at real Donald Trump, Becky, right now? That's coming, isn't it?
No, I'll look right now, though.
I mean, that's coming. Something's coming after 3-2, don't you think?
It has to say something. I'm no doubt about it. Or he's waiting right before the market's open.
Drudge usually has a big boom or something like that. I'll check that out.
Anything this morning, yeah.
Yeah, but 3-2, that, I mean,
That was
for a
way
while,
better.
we were below 2.
Yeah.
Right at the beginning of this, with the government shutdown and everything else.
Yeah.
Well, I don't even know why we even ask
optimistic looking to this
Yeah.
weren't looking for necessarily.
Why do we even
3%.
ask economists what they think? I'm sorry, present company excluded, but why do we even pay any attention?
Personally, I think economists are geniuses, but you have your opinion and I've got mine.
You don't really believe, you don't.
No, I mean, let's face it, whether, we know that forecasting a single quarter growth rate is a bit of a throwing darts at a dartboard. But
Not to mention that this number is going to be revised anyway.
It's going to be revised.
Right,
What we
but the
do
first
know
quarter,
is,
we were getting less than 1%.
I think,
most first quarters,
yeah,
weren't we?
because that was people expecting the
inventory
seasonal adjustment mess to affect the data. But the big story here is that the doom and gloom crowd that thought, that the inverted yield curve and the equity market correction, all that was a sign that the economy was going to have a hard landing.
Well,
that's clearly wrong.
Lindsey, I'm sorry, Lindsey, you need to talk. Just get in here. I'm sorry. What do you give me your comments? And you're probably closer than Ethan, right?
Well, I do think this was a very solid number, certainly stronger than most had expected. But remember, this is very much in line with what the Fed had talked about, that the economy is still in a good place. They did not pull back on quantitative tightening because they were concerned about the economy falling off a cliff, but they identified some early signs of weakness, of potential waning momentum as we go further into 2019. And so this was preemptive action to allow the recovery or the expansion to continue. And it looks, based on this number, like their action was very much correct. They did give the economy extra room to run, and we were able to stave off that weakness and continue to see some of this more positive data. At the same time, I don't think this means any sort of move from Fed policy in the near term.
Yeah,
again, the Fed really focused on the future, not looking in the rearview mirror. First quarter was great, but there are some signs that momentum will continue to wane as we go into the end of the year. So the Fed sitting tight, happy with this number, but no reason to change policy at this point.
Really? Because that's the next thing. It's like, uh-oh, they're going to be back thinking about it. But we got to watch inflation. So, Ethan, Barry Knapp says, another very strong intellectual property investment number, plus 8.6%. That's what you're missing. That's driving stronger productivity, and it's from the tax bill. Why is that?
Well,
true?
you know, we have to be careful with this intellectual property story. The change in the tax law has changed the incentives for where companies book their profits, the tech sector. So when the U.S. had high corporate tax rates, companies had a very strong incentive to book their intellectual property in Ireland and other low-tax countries, and that's why Ireland had these crazy numbers on their intellectual property investment. And so what happened with the change in the tax law is it's really distorted the GDP statistics. Companies are reporting that the intellectual property is being developed in the U.S., where it really is, instead of overseas because of the tax law change. So some of this is probably real. There's real intellectual property development going on, and some of it is we've seen it from the beginning of last year. Some of it is basically a distorting effect of the tax law, encouraging companies to book it as a domestically generated intellectual property.